Warning, the US dollar is being used as an instrument of war, and it's the end game. Now, the warnings of the financial system endgame have been there for decades. Most people still haven't realized the significance of what just happened over the last few months. And it's no wonder, with mainstream media lying to you and of course a steady stream of manipulated numbers and data, it's hard to sort through. Now, the narrative we are being fed and the reality is much different than what you've been led to believe. So in this video, I will break down the warnings given to us 5 decades ago that's become true, and we're seeing it firsthand today. We will look at the data and actual events that are the catalysts that just sent us over the edge, what the manipulated and the real numbers are, and of course, what you should be doing with your money and portfolio to protect yourself and thrive as this whole system changes. So let's go. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money because almost everything you have learned is wrong. Now, I've been covering this transition for a long time. I've made a couple key videos where I've kind of almost predicted the future, not because I have a crystal ball, but because I can see the policies that are going into place and understand what that means. Now, I'm going to be having a live presentation where I'm going to break this down, do some live Q&A. It's going to happen next week. There's a link down below if you'd like to join that. Like I said, it's free, but it's something I can't do on YouTube. We go deep into what I'm seeing and then more specifically what actions I'm taking with my own portfolio, the exact names, exact positions, things like that with Q&A. So if you want to join that, there's a link down below. Come hang out with me for free. We're going to get really deep into this stuff and hope you join me. All right, now jumping back into the video that we have at hand right here, talking about the end game. Now, the end game. When is the end? I get this question all the time. When is it going to be the end? Well, it's happening. We're witnessing it. It's kind of like watching paint dry. When will it finally be dry? Well, we're watching it dry, kind of the same thing. All right, so to understand this a little bit, to make better sense of it, you can see that the US dollar has been the reserve asset, of course, right? It's been the dominant reserve asset. And really, it took over from the pound sterling. So the dollar hasn't always been the reserve asset. What we can see right here in this chart, the dollar took over from the UK, from the British pound sterling. Before that, it was France. Before that, Netherlands. Before that was Spain. And so you can see each one of these rise and fall. Now, I'm not going to go back through all of this, but to understand how this happens, when it happens, you have to understand that it's a process. So when the dollar took over from the UK, you can see that there was a decline happening here at the same time it was increasing there. So you're looking for something falling as you're looking for something rising. The other thing to keep in mind is that this happened over about a 40-year period. So it's not like it's just one day this happened, but let's look at a couple of the key levels here. So the first thing is that let's just take a look at what the definition of a reserve currency is in the first place so we can see the key takeaways. Reserve currency is a large amount of currency that's held by central banks. So other nations of the world have their own central banks. Where do they keep their savings? Where do they keep their money? Well, they hold it in reserves, another word for savings. So it's currency held by central banks. And we can see that it facilitates global transactions. So of course, the world is set up for global trade. That's how we've been able to flourish as much as we have. And so these central banks need to be able to trade with each other. And by having it in this reserve currency that everybody else accepts, it makes it very easy to facilitate these transactions. And then we can see a large percentage of commodities are also priced in the reserve currency. So of course the dollar, after it came off the gold standard in 1971, went on to the petrodollar standard. So then it was backed by oil, again, a commodity. Gold is priced in dollars, oil is priced in dollars, so you can see the currencies, the commodities are priced in that. So we can see that one is rising and one is falling at the same time. A couple other key numbers that we want to take a look at real quick is that at that time when the dollar took over from the pound sterling, 50% of global GDP, gross domestic product, was from the United States. 50%. The US made up half of that. What is it today? Well, let's take a look at that. I have a couple charts we can take a look at. So what we can see here in a visual format going back to 1960 is that we can see that the United States made up the majority of global trade, GDP. But over the years, the green that we have here at the bottom is the US GDP going up, but what we have here is the other countries, or the rest of the world has been growing. And so what we can see is that the US had 50% of the GDP at the time of the Bretton Woods Agreement, when the US took over the reserve standard. But today, it's much lower. As a matter of fact, we can see that today, it's not even the leader. In fact, it's only number 2. The U.S. makes up about 13.6% of global GDP, with China being above it at 18.4%. So we're a long way from where we were. Now, one thing to note is that no country really has a massive dominance. Of course, like I said, China is a little bit over the U.S. All right, but the other thing to keep in mind is that the U.S. also had about 2/3 of the gold in the world. They were holding on to that amount. Now, we don't know, does the U.S. still have this, about 8,000 tons as they project? Of course, there's no audit. They won't succumb to any audit. A lot of people, including myself, don't think that there's all that gold that's there anymore. China, who doesn't really tell us how much gold they have, rumored to have over 20,000, maybe as much as 30,000 tons of gold. And so, does the U.S. have the most amount of gold? We don't really know, but it looks like maybe not. What we can also see here when we're looking at reserve currencies is that we can see that when Great Britain, whose pound was a de facto reserve currency, gave in to devaluing its currency. So what caused the pound sterling to start falling here was that they were devaluing it, debasing it, to print more money to go fight the war. So they were devaluing it, which is what pushed them down as the US was coming up. Meanwhile, the dollar was the only currency that was backed by gold. Again, they had 2/3 of the world's gold. And it said America held, 2/3 of the world's gold right there. So you can see that. The other thing is that it had global trust. So at the time, the US was a very trustworthy nation. Apparently, they had the gold. People knew about it. Other countries had the US even hold their gold for them. My, how things have changed. All right, now if we keep going on, I talked about the warning that was told about over 50 years ago that we knew this was coming, and this is something known as the Trifens Dilemma, or also called Trifens Paradox. And basically what this says is that the nation that has the reserve currency of the world will be forced to supply the world with those dollars. In order to supply the world with those dollars, they'll have to run massive trade deficits, meaning they're going to have to import almost everything. So there's this trade deficit. And so basically the world is being forced, the country, the US in this case, with the reserve currency would be forced to send dollars to the world. We can take a look at exactly what this Trifens Dilemma is here. You can Google it on your own later if you want. Well, we can see that the dollar could not survive as the world's reserve currency without requiring the United States to run ever-growing deficits. So meaning they have to spend more than they're taking in, which of course, if you're a household managing your own budget, that's never a good thing. We can see that the popular reserve currency lifts its exchange rate, which hurts the currency issuing country's exports, leading to a trade deficit. So that's exactly what's happened. And we can see another reserve currency replacing the dollar would increase borrowing costs, which could impact the United States' ability to repay debt. So if, or when we should say, that another currency replaces the dollar as the reserve currency, it's going to make it very, very difficult for the U.S. to pay back its debts. All right, so that's one of the big problems that we face. Now, we can also see that in order to do this, in order to run these massive deficits, what the United States had to do is they had to hollow out the middle class. They had to hollow out the manufacturing base. So the U.S. used to make everything. We used to make our own cars, our own clothes, our own food, etc. And all those jobs have been shipped offshore. We had to do that because of the Trifens Dilemma, Trifens Paradox. What we can see here is that statistically we can see that the deficits have just been growing bigger and bigger and bigger over time. And that's exactly what's happened because the dollar has managed to do that. Now, while that may be a great thing for the United States because we can print trillions of dollars and we cannot really suffer as much inflation because we're shipping that off to the rest of the world, what happens is at the end of the day, it makes the U.S. very, very fragile. And that's the state that we're in right now. So let's take a look at this. So the U.S. has become very fragile. Through the coronavirus pandemic, the whole world was put on notice that, shoot, the United States can't even make PPE? They can't even make protective gear for hospitals? Like, the U.S. can't make face masks anymore? Is it that hard? We had a big problem with that. We saw rare earth elements, a big problem with that. Rare earth elements are like magnets that go in electronics. Of course, everything's driven by magnets today, and we don't even have those. It's become a massive problem in National security, we found out even with antibiotics, we can't even get our medicine if it's not for other countries. We can see that 97% of antibiotics in the United States came from China. 97%. It's a pretty big deal. As a matter of fact, it says that it's a security concern. If we're dependent on China for thousands of ingredients, or it says we are dependent on China for thousands of ingredients and raw materials to make our medicines. So while the exact number of percentage of medicines we get might be a little misleading, it's the ingredients that we need. And so we need the ingredients and raw materials to make our medicines. The Department of Defense only purchases a small quantity of finished pharmaceuticals from China. So we only get a small percentage of the finished, but all the ingredients come from China. About 80% of the active pharmaceutical ingredients, APIs, used to make drugs in the United States are said to come from China. So we can't make our own masks and our gloves, our protective gear. We can't make our medicine. We need it for the rare earth elements we're talking about, which go into all of our electronics. So we can see here that China supplied 80% of rare earth elements to the United States. So we need that for our electronics, and that's cool, you know, for your phone, for your TV. But what about for like the missile guidance systems? What about for the nuclear submarines? Yeah, we need them for those things too. And if 80% of them are coming from China, how could we even go to war with China or any other nation if we can't even get the parts that we need for our military? And of course, the answer is we can't, which is why it's a national security issue. What are rare earth elements used in? Well, they're used in rechargeable batteries for electrics and hybrid cars, advanced ceramics, computers, DVD players, wind turbines, of course, solar revolution, catalysts in cars, oil refineries, monitors, televisions, lighting, lasers, fiber optics, superconductors, and glass polishing, and electric vehicles. So basically, everything that we need to live in the modern age comes from that, and about 80% comes from China. And then, of course, we know we have a massive chip shortage, and the US produces just 12% of the world's computer chips. They produce just 12%, which is why we have new cars sitting on the lots that can't get delivered, and so many other things. So it's made the US very fragile by having to do that. Now, what the US has done really well, again, per the Trifens paradox, Trifens Dilemma, is that the US had to hollow out its manufacturing base so we could buy from other countries so we could supply them with dollars. So what we've done really good with is producing dollars. That's the national economy anymore. That's what we're exporting to the world, producing dollars, like a gas pump, just pumping the world full of dollars, full of inflation. And we've pumped out about $11 trillion in the last 2 years. As a matter of fact, we've seen the monetary base increase by over 40%. This is a chart I'm sure you've seen. This is one of the most often used charts, the M2 money supply. And you can see right here from March 2020 when the pandemic broke out, the increase in the M2 base has gone up by over 40%. Now, while that's pretty shocking, if we look at the M1 chart, it's even worse. Here we can see since March of 2020, we can see a 500% increase in the monetary base on M1, which is the near money. All right, so we can see that we're pretty good at pumping up money. Now, of course, it's no wonder when the money supply goes up by 40% that homes have gone up nationally by about 40% in the same time period, that used cars have gone up about 40% in about the same time period, that gas has gone up by about 50% in about the same time period. Makes kind of sense, doesn't it? Now, what happens is that as the world has become fragile, as the United States has become fragile, as the United States has been pumping out dollars to the rest of the world, it's weakening the dollar system. Sort of like when Britain was forced to devalue their currency to fight the war. It's the exact same thing the United States has been doing to fight the pandemic war and every other war that we're fighting. Now, what really kicked this into gear, really signified the endgame, what most people aren't picking up on, is what happened with the Russian sanctions. Now, I'm not here to say they were good or they were bad. What we're here to do is to see what actually changed the financial system, more importantly, what we should be doing about this. And so really the big piece here, the catalyst, and I've talked about this a few times if you're watching my videos, is when the US seized the FX reserves, the foreign currency reserves. And so what we can see here is Russia was already on a path of de-dollarizing. Russia, China, and most of the BRIC nations, BRICs, they've already been de-dollarizing, getting rid of their dollars and diversifying into other ways to hold money. And so Russia had done that. So we can see that they had gold in Russia. They had They had about 80 billion in Chinese money, 70 billion in French money, 58 billion in Japan, 55 billion in Germany. So the US was only 38 billion, was pretty low down on the list here. However, the entire FX, the foreign currency exchange, the entire system worked against Russia to seize that money. And as a matter of fact, they took that money. We can see here that nearly half of Russia is nearly 640 billion US dollars of gold and foreign currency reserves has been frozen. And now over half of it has been seized and taken. The US is deciding what they want to do with it. Maybe we'll give it to Ukraine to rebuild or whatever they want to do. And that's not the point. The point is, what happened is, it notified all other countries that your money isn't safe. The dollar is not a neutral reserve asset. The financial system is not a neutral reserve asset, or a system, I should say, not neutral. And everybody got put on notice that they can't trust their money in the system. As a matter of fact, the world should have already known this because the US, the Biden administration, had already seized Afghanistan bank reserve as well. But it's one thing to happen to Afghanistan. It's a whole nother thing when it happens to one of three global superpowers like Russia with nuclear weapons. Now, while this is happening, there's a lot of people on Twitter and on YouTube telling you that this isn't the end of the dollar. As a matter of fact, the dollar is stronger than it's ever been. And you might be watching those videos. Some of my good friends make those videos. You might be saying, Mark, but they're telling me the dollar's getting stronger. Why are you telling me the dollar's getting weaker? Well, this is the part where you have to learn to look through the data, because most of the information that you're getting, if it's from mainstream media, is probably intentionally wrong. And a lot of the other data, the numbers, the data is manipulated itself. And so you have to learn to look through some of that manipulation. So let's take a look at that. So the dollar is strong. That's true. So how can I say that the dollar is losing strength, it's dying, losing reserve status, but at the same time, it's getting stronger? Well, it can do both at the same time. Let's break that down. So we can see, if we look at the Dixie, it's up 14%. So the Dixie is the dollar index. So what this chart does is it shows us the strength of the dollar. And what we can see year over year, from about this time last year, right here, to right now, we're up about 15%. We're at 13.6% at the time of this recording. So in a year, in 12 months, we've gone up by 13%. The dollar's gotten strong. Mark, you're wrong. It's so strong. Look at it. Okay, well, that's one way to look at it, but let's look at some different data. All right, let's minimize this chart here. We'll keep this up here if we want to come back to it. The problem is if you're only looking at that chart. Now let's look at it in a different way. So if we take the dollar and we look at it in gold. Remember, gold was money for 5,000 years. It's only been 50 years we're in this experiment. So if we look at the price of gold in dollars, year over year, this green line was a year ago today and a year ago right here. That means it's perfectly flat. That means the US dollar has not been getting stronger or weaker technically compared to gold. When priced in gold, it's remained flat. Okay, so the dollar's remained flat, but the Dixie's gone up. So why has the Dixie gone up? Well, we have to look at the Dixie measures against other currencies. So if the dollar measured in gold hasn't been going anywhere, what that really means is that the other currencies are going down. And we can see that demonstrated very clearly here if we look at the euro priced in gold. So the dollar priced in gold was flat, but we can see here, a year ago the euro was here. So gold has gained 12.5% when priced in euros. Okay, what else is in the Dixie basket? We can look at the dollar, we can look at the British pound sterling priced in gold, and we can see from a year ago right here, and we are up over almost 11%. So gold is up in all these currencies, and here we have the Japanese yen, which might be one of the weakest ones of all, about to blow up next. And here we are, year over year, we're up 15%. So what does this tell us? This tells us that the dollar is strong. It's really strong compared to other currencies. But when we look at it in gold, the dollars actually remain flat. It's the other currencies that are falling down. All right, so if the currencies are falling down, what does that mean? All right, well, remember, money is a medium of exchange. It allows us to exchange that money for goods and services that we really need. Real, hard, tangible things, sort of like commodities. Commodities like energy, like food, coffee beans, oil, gold, things like that, things that we really need. And so while the dollar has supposedly gotten stronger, the purchasing power, the amount of commodities that we really need that it can buy has gone down. So when we look at food, energy, fertilizer, aluminum, neon, all things that were in massive shortage today, we're seeing the prices spike. So the dollar's getting stronger compared to the euro. It's getting stronger compared to the yen. Who cares? It's getting weaker compared to all of these things that really matter. And we can see that perfectly in this chart right here. Here's USCI, which is a commodity index. And we can see year over year, right here from a year ago, we're up almost 50% priced in dollars. Now we can see that we're almost at all-time high levels. We had a little peak right here. We're basically at all-time levels. So the dollar's strong, right? Well, it is compared to the euro, compared to the yen, compared to other currencies that are all crashing. The dollar is weak when it comes to buying real things that we really need, like commodities. Now the thing with central banks that they're just starting to figure out is that the central banks can print a lot of dollars, but they can't print more natural gas. They can't print more oil. As a matter of fact, they can't even print baby formula. They're having to bring it in on planes from other countries. All right, so what does all this mean? Well, what this means is that you need to look through the narrative, look past the narrative. You need to look through the manipulated data so you can understand what's really going on. Prices are going through the roof, but it's not because the prices are going up or things are becoming more valuable. It's because the dollar is losing value. So yes, the dollar is stronger compared to other currencies, but that only makes it the cleanest shirt in a closet full of dirty shirts. All right. What we want to do is want to maintain our purchasing power because we need goods and services in the future. So I'm looking at in the future as this shift continues to take place, as we continue to move off of this fiat money system and into the monetary system, we want to be looking at things like commodities. Of course, like I said, precious metals, energy, food, things like that. In the environment we're in right now, I have a couple shorts against the market, against some of these big major indexes. I don't recommend that for everybody, but you might want to put a couple shorts on just to hedge your bets, depending on what your portfolio looks like. You also want to hold the right type of cash. I'm actually holding some cash right now. I'll tell you in my special event next week what percentage of my portfolio I'm holding in cash. There's a link down below to join that. But I'm holding some cash, but you want to make sure you're holding the right type of cash. Also, you need to get knowledgeable and you need to be prepared. So without getting the right data, without getting data that's not manipulated, without being able to see through the narrative, you're not getting the right knowledge and you won't be able to be prepared properly. And then finally, you want to invest in what you know. It was told to me a long time ago that everybody needs to have an edge when you're investing. And if you don't know what your edge is, that means you don't have an edge. And you need to learn that, invest in what you know, whether that be real estate, whether that be farming, whether that be precious metals, or maybe you need to go figure out what that edge is. But these are the ways to succeed. But like I said, there's a whole lot more to it. I'll break it down in about an hour presentation with live Q&A. I'll show you some exact positions I'm buying. We'll talk about what percentage I have in cash and so much more. There's a link down below if you want to join me to that. Otherwise, if not, give me a thumbs up on this video if you like it. And if you don't like the video, that's okay. You can give me a thumbs down. But at least leave me a comment and let me know why. And that's what I got for you today. All right, to your success. I'm out.